Hi all, this is Michael Soper. We will be starting in just a few minutes. Hopefully everyone can hear me, and we have no technical glitches. So I'll let you know when we're getting started. All right. Hi everyone. Welcome to the TBR webinar series. My name is Michael Soper. I'm a senior analyst in the telecom practice here at TBR. And today I will be presenting the webinar 5G and Geopolitics Take Center Stage in the Development of the TIS or Telecom Infrastructure Services market. And this is presenting insights from our TIS Global Market Forecast for 2020 to 2025, which actually just published yesterday. If you have access to it, then you can look out for that. So before we get started, just a couple of housekeeping notes. At the bottom of the screen, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, and as well as the survey, which would be great if you would take at the end. After the webinar, you'll receive an email with a replay link, as well as a link to view and register for other TBR webinars, which typically occur on Wednesdays. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@ti.com. And thanks all for joining us. All right, so let's get started. And again, just throughout the presentation, we'll have a dedicated time at the end for Q&A, but you can, and I'll answer your questions then, but you can also type them in as we go along, and I may get to them. All right. So my name is Michael Soper. I am the senior analyst in the telecom practice. I cover the vendor side of the telecom equation here at TBR. And one of my content areas is Telecom Infrastructure Services. We have a broad coverage of the telecom market. I'm sure a lot of you are familiar with our coverage and subscribe to it. But here's a view of it right here. Our TIS portfolio includes the Telecom Infrastructure Services benchmark, this global market forecast that I'm presenting to you, as well as the market forecast centered on TIS in North America. I'd like to set the stage with a little bit of taxonomy. So we define the TIS market as including all the external spend on services by CSPs. And when we say CSPs, we include telcos, cablecos, and web scales. And then within cablecos, there's a subset of pay TV satellite operators, such as Dish Network. And that's all their spend related on or related to communications and IT infrastructure. We break that down into four main segments. So deployment services, maintenance services, professional services, and managed services. And if you're interested, we can send you more detailed definitions of these areas. So I'm going to spend a little bit of time on this slide here. We're going to talk about some of the key growth drivers and key growth detractors or risk factors in the market that will threaten the growth that we have projected over the next 5 years. Right now, we view the TIS market as having entered a period of sustained growth, and that's largely thanks to 5G rollouts and unprecedented government stimulus heading towards the ICT sector. But we do see plenty of risks that could impact the market. One of the key growing investment areas obviously is 5G in large markets, and that's primarily when we talk about large markets, we're talking about the United States and we're talking about China. And so those two countries will contribute to the growth in 2021, and we see them committing further spend in 2022 that will help stimulate the market even further. And while we do see a number of risk factors through mid-decade that we'll talk about in a second, the 5G rollouts and the other spend on things like digital transformation through the forecast period in both China and the US will outweigh any growth detractors that may occur in our projection. So let's talk specifically about some of the growth drivers. So of course we see RAN deployments, and this is C-band in the US, this is China's aggressive 5G initiative, blanketing the country in 5G RAN coverage, and then the C-band rollout in the US, which is going to occur over the next several years. We certainly see a staggered rollout of that band in the country. We'll also have some support from LTE in emerging markets, and then late in the forecast period, there will be more 5G spend in some emerging markets, some in CALA, some in, when we say CALA, that's Latin America, some in Emea, and some Southeast Asian markets. Of course, there are a few countries in these markets that are already exploring or rolling out the technology, but in terms of mass deployments, we expect that to occur later in the forecast period in emerging markets. We also have web scale investments as a key growth driver. That is largely confined to the optical space and the product attached services that go along with rolling out new optical equipment. The web scales are also rolling out edge infrastructure, and some of them are rolling out access infrastructure. If you think about Google Fiber, which is obviously somewhat low key at this point, Facebook is also rolling out some fiber. And then the big spend there is Rakuten, which of course is rolling out a countrywide mobile access network in Japan. Generally, there'll be edge compute infrastructure build-outs from all three CSP segments. Telcos and web scales will primarily capture this opportunity. The cable cos at this point, we view them as having somewhat missed the boat. We will see some investment from Comcast, but largely edge compute infrastructure build-outs will be the domain of the telcos and the web scales. Digital transformation related projects. A lot of this is confined to back-end transformation as operators are interested in better monetizing their new services enabled from their 5G networks. So they'll be investing in things like billing and charging, new OSS systems, and the TIS that goes along with that. It can be pretty intensive on the professional services systems integration side. Government stimulus as well. So there are several areas in which governments globally are interested in supporting telecom operators. There's one of the things that they're looking at is infrastructure swaps. And when we say infrastructure swaps, we're talking about the government mandating or strongly suggesting that the operator should replace its legacy equipment from an untrusted vendor with the gear from a trusted vendor. Of course, this is largely happening with Huawei and ZTE. Governments are mandating that some of their operators jettison ZTE and Huawei equipment and adopt equipment from either a Nokia or an Ericsson or Samsung, or many are exploring open virtualized RAN options from vendors like Mavenir or Altiostar. Governments are also interested in closing the digital divide, and they're willing to put billions of dollars toward that goal. So this is enabling more people, often in rural areas, to be able to access broadband internet speeds. Some of the things that governments are supporting are things like satellite initiatives, fixed wireless access, or just a typical rolling out fiber to more premises. And governments are helping foot the bill for the operators that are rolling that out. Lastly, which will be somewhat of a growth driver, is greenfield network builds. Of course, we talked about Rakuten, that falls into this category. Dish Network falls into this category. Of course, their spend is on the low end of what you would typically expect because they're rolling out a cloud-fied virtualized network. We'll see if they're actually able to stick to their spending goals. That's certainly up for discussion at this point. Or we'll see Amazon, partially contributing to that bill, which helps Dish Network keep the costs down. So we have a pretty lengthy list of growth detractors here. Again, I don't want to scare anyone. We still project the market to be growing, and that's largely due to the U.S. and the China 5G RAN bills, as well as the web scale investment, things like that. But there are certainly risk factors. One of them is the economic impact of COVID-19. It's had a pretty outsized impact in emerging markets, specifically CALA. We saw a pretty sharp contraction in TIS spend in 2020 in Latin America. We don't expect such a sharp contraction in 2021, but it will still decline, and then we have growth happening there in 2022. But that's certainly a risk factor for this year. Of course, India, it remains to be seen if spend contracts there. We think that is likely this year given the situation with COVID-19. We also are looking at CSP restructurings, bankruptcies, and consolidation. This is happening at the tier 2 and 3 level of the CSP, so the smaller operators. They're having to undergo restructuring and then spend less on their network. They could go into bankruptcy, and we're also seeing a lot of them be acquired by some of the larger tier 1 operators, and that shrinks the pie of available of the addressable TIS market. The operators also increasingly using their existing site grid as they migrate from 4G to 5G. There'll obviously be plenty of spend on things like small cells, but the macro cells, they will largely be on the existing LTE sites. Cloudification of the network is something that is alleged to reduce the spend. We particularly expect that in the deployment phase, but they're, along with white box and open-based hardware, we're likely to see some decline in deployment spend, but there's also likely to be a corresponding increase in the professional services as the networks become more complex, introducing more multi-vendor solutions into the network. Automation, AI, machine learning, I think that's well established there. We'll also see some network sharing and other forms of resource pooling. We see that in places like Canada, China, and I think we'll increasingly see that in Europe as governments may encourage that to more quickly roll out their 5G coverage. We'll also see some legacy infrastructure rationalization and decommissioning. This is an ongoing trend. It's been delayed in some places due to COVID-19, but we're likely to see some acceleration of that towards the end of the forecast period. The chip shortage that's occurring right now has not had much of an impact in 1Q in terms of some of the big vendors being able to fulfill orders, but we could see the chip shortage threaten some of the spend later in the year. The pandemic has also delayed 3 GPP standard leases, particularly Release 17, and that could cause some operators to delay their 5G spend. In Europe, particularly, we're seeing spectrum auction delays, and that will push European operator 5G spend later into the forecast period in some of the countries. Lastly, interest rate normalization. This will contribute to, if this occurs, it's likely to contribute to more bankruptcies on the tier 2 and 3 level, as well as increased restructuring, which would cause the CSP to reduce their spend on their network projects. Let's go into the segments, and we'll speak about those quickly. We'll start with deployment services. And so what we're seeing in deployment services is pretty strong growth through 2023, and that's largely due to China's phase 2 deployments for 5G RAN. We expect that to contribute pretty substantial TIS revenue starting in the second half of 2021. At the same time, C-band rollouts in the U.S. will also ramp up, and then those projects in both countries will ramp up further in 2022. We're also seeing the rollout of 5G driving investment in things like optical transport, front haul, mid haul, back haul. We're seeing more investment in edge infrastructure and the core network, and that drives spend on things like engineering and installation. We do see growth being partially offset by the chipset shortage, as well as Huawei's and ZTE's geopolitical challenges. They're likely to shrink their market share outside of China this year, as well as next year. We'll see pockets of spend in places like India and Kala materializing in 2023, when we see China's 5G coverage deployments largely conclude. So in those later years of the forecast period, there'll be more investment in some of the emerging markets on initial 5G rollouts. But still, by the end of the forecast period, we're going to see a decline in the deployment services market, and that will be largely due to the macro trends, things like consolidation, increasing adoption of open and virtualized RAN, and the improved installation economics that the CSPs will get from deploying that technology. We're also likely to see lower demand for site location and construction services over the long term. CSPs will be shifting their focus to adding just incremental capacity to their existing sites. And so the densification will primarily include things like software upgrades or adding new radios to existing sites, rather than finding and building new sites. So let's move on to the maintenance market. So the maintenance market, of the 4 segments, we have maintenance struggling the most during the forecast period, and there are some underlying headwinds in the maintenance space, which is somewhat threatening to the margins that the vendors are able to obtain. Maintenance services is certainly the highest margin TIS service. So in the last year, so in 2020, we saw that the pandemic delayed decommissioning efforts in some markets, especially those that rely on those networks for voice services. So this pushed out the timeline. The CSPs could achieve some cost savings from shutting down those legacy networks. So in the near term, the CSPs are maintaining both their 5G and legacy networks, and this we expect to drive growth in the maintenance market through 2022. But over the long term, the maintenance market faces pretty significant underlying headwinds, namely things like the introduction of more automation and AI/ML technologies, the shift towards a more efficient network architecture, leveraging things like cloud and virtualization and white box hardware, and then just generally the shrinking pie that comes from CSP consolidation and legacy infrastructure decommissioning. So in the professional services market, we view this as the fastest growing TIS segment, and that's due to network infrastructure integration tied to 5G rollouts, as well as different network and business transformation initiatives that the CSPs are undertaking. So as I said, the aggressive 5G related infrastructure deployments support the network infrastructure integration component of the professional services market. And so some of the 5G rollouts occurring in the U.S. and China are supporting particularly strong growth in the early years of the forecast period. And then in the latter couple of years of the forecast period, as we see more of the network functions cloudified and technologies like open and virtualized RAN introduced into the network at greater scale, we view the complexity of these technologies as causing project costs, systems integration project costs, to be pretty high compared to historical levels. And so that supports the growth through the end of the forecast period. Also supporting growth is CSPs, primarily tier 1s, are continuing to evolve into digital service providers, leveraging cloudified network architectures, as well as transforming their back offices, things like their BSS and OSS. So this is going to take the full range of professional services. We're talking consulting, systems integration, increased focus on security services and application integration, things like that. One of the leading beneficiaries of this trend is the SI firms, companies like Tech Mahindra, Accenture, Infosys, IBM, TCS. These companies are viewed as providing vendor agnostic services. So as the introduction of systems with multiple vendors contributing best of breed products, you'll see CSPs turning to their SI partners to help integrate all these disparate technologies and technologies from disparate vendors. On the managed services side of the forecast, this is somewhat influenced, actually it's quite heavily influenced in 2021 by the conclusion of the managed services contract that Ericsson held with Sprint. When Sprint was acquired by T-Mobile, that managed services contract since then it's been winding down. And so Ericsson will be heavily impacted by that in 2021. And then we expect growth to return in 2022 as CSPs use more automation and AI/ML-based solutions. The vendors are being quite cautious right now about what kinds of managed services contracts they take on. They want to ensure that they're able to manage their risk appropriately, that they're able to achieve profitability. Many of them, I guess most prominently, probably Ericsson and Nokia, have been burned, if you will, in the past and had to exit some managed services contracts that were highly labor intensive. They included a large field work component, and these vendors are keen not to enter into those types of agreements. The vendors that are interested in those agreements still are largely the China-based vendors, so we're talking China Communication Services, ZTE, and Huawei. they still have a cost advantage in terms of their ability to throw labor resources at that field work, and they're able to wrangle some profitability from those large-scale network outsourcing managed services contracts. Growth, as I said, restarts in 2022, and through the end of the forecast period, we'll see vendors providing CSPs with access to subscription services. Those types of things that provide enhanced insights and cost savings via areas like AI, analytics, and automation. One of the more prominent solutions in this area is something like the Ericsson Operations Engine, which has seen fairly broad adoption among Ericsson's existing managed services customer base. We also view the CSPs as increasingly relying on the vendors for best practices, expertise, and access to new platforms that will help drive their business outcomes in a more cost-efficient manner. So we're looking at something like a Nokia Wing. Nokia Wing provides IoT managed services, and that enables the CSP to optimize the business, focus on their core competency, and not have to worry about that aspect of their business as much. All right, so if we segment by CSP type, we see that there's pretty strong growth in the web scale customer segment, some growth in the telco customer segment, and then decline in the cable co customer segment. And these are pretty steady trends over the course of the forecast period. Let's begin with telco. So the telco TIS spend we have growing through 2024, and that's largely due to an unprecedented government support initiative from governments around the world. And there's something like $1.4 trillion globally earmarked for ICT investment, and of course some of that is going to go towards broadening mobile access networks, deploying 5G, increasing access to broadband services in more rural areas, things like that. So we'll also see, of course, during the forecast period, a more widespread adoption of 5G, not financed by governments, just financed in the regular course of business by the CSP. One of the trends that we're monitoring here is telcos. They're diverting cash into incremental CapEx growth as they reevaluate their core strategic priorities. They're also reducing the level of shareholder capital returns, things like dividends and share buybacks. They're divesting non-core assets so that they can focus on core assets. One of the, I think probably the most prominent example of this trend is AT&T at this point. Of course, they're in the process of offloading their Warner Media business, and they've announced a corresponding increase in CapEx as that goes through. They've also elected to divest part of their DirecTV business. So AT&T is probably the most prominent example. We also have Verizon, who's getting out of their own media business. That's on a much smaller scale, but Verizon's also announced an increase in CapEx over the next few years. By 2025, we do see this market beginning to decline due to some of the unavoidable trends at a macro level, things like industry consolidation, legacy infrastructure rationalization, and the cost savings that are realized from automation and codification. All right, let's move on to the cable co segment. We view the cable co segment as having very few growth catalysts at this point. If we look at the U.S. market, Comcast continues to invest. They're investing in things like edge compute infrastructure. We have Dish Network building out their greenfield cellular network, although the cost is supposed to be at a lower level than you would typically see. Otherwise, cable cos globally, they're kind of they're coming off of an elevated spend cycle. They upgraded their wireline networks, and now the wind down that investment cycle, as well as the continued erosion of the linear TV subscribers and growing industry consolidation, that's going to cause the TIS spend in aggregate to decline through the forecast period. We see a potential for cable co greenfield wireless network builds. This is largely a trend in the U.S. Where some of the cable operators acquired CBRS spectrum, but these builds, if and when they occur, are going to be relatively small in scope and will not be able to overcome or offset the other trends in the market. If we move on to web scale, so this forecast for web scales includes what we call the big 9 web scale companies. So that's Alibaba, Alphabet, Amazon, Apple, Baidu, Facebook, Microsoft, Rakuten, and Tencent. We expect these companies to increase their involvement in the telecom industry through the forecast period. They're going to be extending their cloud businesses into the network domain, capitalizing on new opportunities presented by the digital economy. They'll be investing in this network infrastructure, not just for enterprise side, but also for the consumer side. So we see most of their TIS spend in the optical transport domain, but they'll also be investing in some of the intelligence layer related, something like 5G core initiatives. And so we expect, like Rakuten, some web scales will be owning their 5G core and access networks. We're certainly seeing greater involvement in the telecom space by all of the web scales to varying levels, and it's not entirely clear what many of them are doing at this point. But we certainly see greater involvement. One thing I'd like to call out is the China-based web scales in the telecom segment. They're entering this space a comparatively low scale when you look at how the U.S.-based and Rakuten are entering the telecom space. In China, the government has essentially mandated that the state-owned telcos will be set up to capture the 5G opportunities, and the web scales are not going to be allowed to encroach on that opportunity. It's somewhat of an action for the incumbent CSPs in China. So here's the Telco TIS market forecast and growth graph. I already spoke to this graph. I should have moved the slide along, but here it is. And then there's the Cable Co TIS graph, as well as the web scale graph. And here you can see the list of our big 9 that are included in this forecast. If we move on to the regional view, we'll start with North America. We've hit on a lot of these trends at this point. But so, of course, the macro trend is AT&T and Verizon's urgency to catch up to T-Mobile and 5G. We see CSPs exploring open vRAN and edge computing. We also see them solidifying their backhaul networks. We see them investing in digital transformation and edge computing. Like we've talked about, we expect the edge builds to be driven by telcos and web scales, and cable cos have largely missed the opportunity. One of the 5G spectrum and availability progression in the U.S. Has been elongated when you compare to something like the LTE spend cycle. And so this is going to increase the duration of the U.S.'s 5G build cycle. So we have C-band deployments occurring en masse through at least 2023, Other bands will be built out concurrently and subsequently, and so that supports growth through most of the forecast period. As we talked about, AT&T, they've increased their CapEx guidance to deploy 5G, particularly in the C-band. They're also looking at expanding their fiber networks, looking at capturing some of the edge compute opportunity, and all that will contribute to growth. The government stimulus is also going to be a significant growth driver in the forecast period. There's billions earmarked for ripping and replacing the equipment from China-based vendors, and that's largely for Tier 2 and Tier 3 operators in the country. We also have fiber and fixed wireless access rollouts that the government is looking at helping fund to help close the digital divide. North America consists of both the U.S. and Canada. Obviously, the spend intensity in Canada is much lower. Canada lags the U.S. in terms of 5G and edge deployments. And to date, the telcos have largely focused their 5G deployments on the larger metro areas. But the coverage and capacity will be built out through the end of the forecast period, especially as more spectrum comes online in Canada. In the early years of the forecast period, so 2020, we see very slight growth, and then growth ramps up a bit in 2021, but it will be partially offset by the winding down Sprint managed services contract that Ericsson held after Sprint merged with T-Mobile last year. If we move on to CALA, the COVID-19 macroeconomic impact in CALA is going to remain fairly prominent in 2021. You'll see CALA's growth rate in 2020 was very low, pretty steep decline there. We have another high in 2021, and then the market will recover in 2022 through the end of the forecast period. Right now, CALA CSP spend is largely focused on LTE coverage, and then they'll migrate to LTE densification. We don't see a lot of growth catalysts in this market. The web scales are not investing very heavily. There's not much of an urgency to deploy 5G or to digitally transform. There is some of this occurring in key markets like Mexico and Brazil, and that's largely at operators owned by some of the bigger European Tier 1 CSPs. But this is not occurring in the region on a large scale. If we look at Emea, so in the report we do break down spend between Europe and the Middle East and Africa. If we begin on Europe, we have a pretty anemic spend through 2023, and the European CSPs are struggling with their governments due to spectrum allocation delays, somewhat hostile regulatory environment, which can hold up consolidation, and then that causes multiple CSPs to reduce their spend or delay project engagements. We also see some lingering economic effects of the pandemic, remaining in Europe for 2023. We'll have somewhat of an offsetting factor will be the government support for swapping out gear from Huawei and ZTE in favor of that from other vendors, particularly Ericsson and Nokia, to this point have been receiving the vast majority of that business. One thing that hurts the European growth rate is that the 5G deployments are essentially staggered through a past period. There's no massive group of countries deploying all at once. So as one country ends its coverage deployment, another begins. And so that depresses the growth rate somewhat. In the later years of the forecast period, we do expect some spend on open and virtualized RAN in Europe. Some of the Europe-based CSPs are pretty aggressively investigating their use of open RAN to diversify their supplier pool or One of the reasons to do it is to put pressure on existing suppliers, Nokia and Ericsson, to lower their prices. And so we do expect this could have some downward pressure on product attached TIS on the continent. If you look at the Emea economies, we see some of them quite negatively impacted by political disruption as well as the macro effects of the pandemic. And that's largely in the early years of the forecast period. Of course, there are some CSPs in some of the more advanced countries in MEA, like Saudi Arabia and South Africa. They're in the midst of their 5G rollouts, but the other countries essentially lack the growth catalysts until the latter half of the forecast, when we expect more investment in LTE in Africa and 5G in some of the Middle East markets. In APAC, again, in the report, we split out the spend between China and rest of APAC. China is the highest spending country in the APAC region, so their spend has a pretty strong influence on the broader GIS market. In 2021 and in 2022, there'll be a pretty significant ramp up in spend on 5G infrastructure. One thing to note is that if the chipset supply constraints become a more pressing issue in 2021 and some of the RAN vendors run low on inventory, China might not be able to accomplish its 5G coverage goals. But if it comes down to it, we expect Huawei and ZTE to prioritize their inventory for domestic CSP customers rather than executing on engagements elsewhere. This isn't a given at this point that supply constraint will become reality, but it is a threat. In the rest of APAC, we've seen governments in countries like South Korea, Japan, Australia, Singapore. These governments, they're making 5G a strategic priority. So those countries are deploying 5G at a pretty large scale at this point. There is some weakness in emerging markets that offsets the spend. We've talked about India and their battle with COVID-19. That's likely to depress some of the spend in 2021. One thing that we're looking at in the mid to late forecast period in India is India CSP's use of self-developed solutions for domestic networks. So if particularly Reliance Jio is looking at this, what they're doing is likely to bypass some of the incumbent vendors. OEMs like Ericsson, Nokia, and Samsung was Reliance Jio's partner for LTE. And instead, they're likely to rely pretty heavily on systems integration vendors and subcontractors for their TIS in terms of their 5G rollouts, since the OEMs will not be needed to provide product attached services. So that's something to monitor there. Quickly, I'll hit the TIS market forecast by CSP tier. You can see how we segment the tiers of the CSPs. We have the web scales included in the tier 1s because of the amount of spend that they're likely to put towards telecom initiatives. The thing that certainly jumps out is the decline in spend by tier 2 and 3 CSPs late in the forecast period. We're going to see tier 1s participate in significant consolidation, buying up tier 2 and 3 CSPs. This is occurring to some extent already if you look at some of what T-Mobile's done recently, and especially Verizon. We'll also have some of the weaker tier 2 and tier 3 CSPs from a financial sense. They'll need to restructure or dissolve in bankruptcy. At the same time, we'll see tier 1 CSPs increase their spend. They can afford to invest in things like 5G, edge computing, digital transformation, and of course the growing web scale spend in tier 1 category will also grow that spend. In the early years of the forecast period, just a bit out of order here, but to jump back to the tier 2s and 3s, while they'll become increasingly marginalized over the long term, in the short term, we'll see them being supported by the government stimulus. The government obviously has a desire to maintain strong competition, as well as improve the security of their networks. So they're looking to fund initiatives like swapping out gear from untrusted vendors in favor of more trusted vendors. One thing to be worried about if you're a tier 2 or 3 CSP is that you could be negatively impacted by the chip shortage. Suppliers, the vendors are highly likely to prioritize their larger customers this year if the chip shortage intensifies. So with that, I'll sum up some of the key takeaways. Certainly, the investment in 5G in the large markets, namely the United States and China, enables the TIS market to recover in 2021 as it enters a sustained growth phase beginning this year. Growth will accelerate in 2022 as this 5G investment intensifies. Secondly, we talked about the broad mandates that exist from governments around the world to invest in ICT and how many billions of dollars will be going towards construction of 5G networks, fixed wireless access, and infrastructure swaps. There are also several growth risk factors that occurring through mid-decade, through the forecast period. Things like the chipset shortage, the ongoing pandemic that is especially hurting the emerging markets at this point, as well as overarching trends that will continually plague the market, things like consolidation and legacy infrastructure decommissioning. To talk about the vendors a little bit, we are going to see the SI firms take on much larger roles within CSP transformation efforts. Companies like Accenture, Tech Mahindra, etc. They'll be much more involved as CSPs adopt a web-scale-like architecture, mixing and matching, getting the best of breed solutions to build out their networks. And then lastly, the intensifying geopolitical challenges for Huawei and ZTE. We expect that to drive market share declines for both companies in 2021 and beyond as these challenges intensify. So with that, I can open up for questions. It does look like we have some right now. Let me take a look. So how does the addressable market look like for the next phase of 5G use cases in low latency services and MMTC? So we don't have a quantifiable breakout for that. That is, I assume, referring to the edge compute build-outs. So I think that's baked into this. We do have an edge compute market forecast that breaks out the services spend, and I can certainly get that over to you. And then the other question we have here is, should we see professional services being ahead of rollout, then followed by managed services, maintenance services, having first more professional services, then less? So it's possible I got, maybe I mixed up my words. So we have professional services being the fastest growing category in terms of the CAGR. So the CAGR over the course of the forecast period is faster for professional services than the deployment services. So you might be referring to some of the lead up services, things like planning, design, and consulting that can go ahead of I'm sorry. Let me look here at this question. Right. So later in the forecast period in professional services, we're looking at greater use of greater importance for the application integration area, more spend on things like security services, which are included within our professional services bucket. And that's due to the increasing complexity of networks, introducing more, like we talked about, some of the more disparate systems, leveraging multiple vendors, leveraging cloudification, doing the SI is very important for porting network applications to the cloud. So that's why we have a sustained growth rate through the professional services forecast. We have one more question here. Considering the importance of the cloud web scale architecture, don't you think the market share of the web scalers you mentioned will take more importance? We do expect let me go to that slide. So, all right. So as you can see in this graph here, we do have the web scale segment taking up a greater portion of the spend in terms of TIS, and that will be due to many of the things we talked about, their greater investment in edge compute infrastructure, their data center interconnect spend, their greater involvement in network access, mobile and fixed access initiatives. So we do have the web scalers taking up a greater portion of the TIS spend. We have one more question here. Where does SI stand when it comes to rip and replace from the infrastructure swaps we're talking about here? So there'll certainly be SI that runs the gamut. There'll be plenty of network infrastructure integration that occurs, particularly if we see Nokia and Ericsson, leading as we do right now in terms of replacing Huawei and ZTE infrastructure in markets like Europe, some places in Southeast Asia, then there'll be plenty of NII for them to take share in. We do see that being more of a product attached service, not going to some of the SI vendors. The SI firms, companies like Accenture, Infosys, Tech Mahindra, Wipro, they're likely to capture more of that NII and application integration as the open and white box deployments occur at greater scale in the latter half of the forecast period. I think just generally how we view open and virtualized RAN, just as an example at this point, is fairly unproven on a large scale. I know Rakuten has done it to some extent. There are some questions around the technology. We're seeing a lot of the Europe-based operators trialing open and virtualized RAN in more rural areas where the data traffic is not as intense. So I think that's kind of that technology needs to be proven out at scale, and we don't expect that until the 2024-2025 time frame. All right, so with that, we do not have any more questions. So we can wrap this up. So, all right. So, please feel free, everyone, to reach out to the team with any follow-up questions. You see my email right there. If you'd like to obtain a copy of the slides, you can see the email for that, webinar@tbri.com. A replay version of the webcast will be available after the event. Will be sent to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. And thanks to you all, and have a great day.